Hi, everyone. Welcome back to Wall Street Silver. Our guest today is the one and only Chief Market Analyst at ITM Trading, the legend, Lynette Zang. Welcome back.
It's good to be here, Ivan. Thank you. It's always so funny when people call me a legend.
You are.
To us, you are.
I've been around a long time. That's what makes me.
That's all it means is you've been around a long time. That's all it means when they call you a legend, right?
Right.
Hey, so Lynette, I know you've got some strong opinions on this. You know, the big news from going on right now is the Inflation Reduction Act. And, there's a big bill that, the president and a bunch of politicians are saying is going to reduce inflation and I don't know, solve the climate and a bunch of other stuff. It seems like a big giveaway to me. They're going to spend $700 billion and that's going to reduce inflation. I mean, what's your first take when you see this thing?
Well, always beware of the way they named things, because 100%, it is just the opposite. They're talking about it reducing inflation in 10 years. Okay, well, the Fed is trying to raise rates to fight inflation right now. So I think this is going to be highly, highly inflationary. And isn't this the way that they always sell it? It's going to reduce the deficit. So now inflation is a problem. So it's Inflation Reduction Act. But when? Yeah, after they spend all this money and then they sick a whole lot more IRS agents on people that are, usually earn less than $200,000 a year, but nobody's taxes are going to go up because of this. It's a joke. The name is a joke.
As I saw it, there's 87,000 new IRS agents coming to administer, the tax code, and there's only something like less than 1,000 billionaires in this country. So the politicians are claiming, oh, we're just going to go after the billionaires. Why do you need 87,000?
Right.
And I get it, some support staff and all that, but it just seems like it's obvious they're going after middle income people. They don't need 87,000 new employees to go after the wealthy, right?
I would agree with you 100% on that, Jim. 100%. Yeah, it's just how they're going to pay for it is truly a joke. And even look at what they say there. I love that they say that the taxes on corporations, you'll get a 15% minimum tax, and then they may tax the stock buybacks. Except that that's still under discussion. Did you notice that they didn't put any income in there because they're still talking about it? What do you think the chances are of them actually taxing corporate America more or doing something about those stock buybacks?
They actually removed the part about, there was in there something to change the carried interest rule for hedge funds, billionaires. That's the one thing they removed at the end, right before it passed. They removed the extra tax on the hedge fund guys, right?
That's funny.
Yeah, I love it. So I think it's a joke perpetrated unnecessarily and unfortunately on the tax-paying public, because we are the ones that have to pay for it. Because we're not even going to get that far, right?
Yeah.
Going to do it over 10 years, but we're going to spend a lot of money, new money. It's not even spending money we already have. We're going to create a whole bunch of new money. And what I also think is really interesting is the timing of it. When on a global basis, you have central banks that are raising interest rates, even though they admit that there is nothing that they can do about the inflation caused by supply chain bottlenecks, and nothing that they can do about the inflation that's caused with the war between Russia and Ukraine. The only thing that they can control is demand, right? So, and they want to make sure that they maintain price stability, which is the inability of workers to demand more money to keep up with inflation. That's what price stability is. It's not the price of a cup of coffee, it's wages. So, that kind of puts the Fed in a very interesting and precarious position, puts all of us in a very interesting and precarious position. I personally think that between what the Fed is doing and the passage of this act, takes us into a whole new dangerous level of this current trend cycle. Because what's the Fed doing? They're fighting for their credibility, right?
Right.
And the only way that they can fight for their credibility is by raising interest rates. And so with all this new money coming into the system to generate even more inflation, does that mean that, you know, at what point do they pivot? Are they going to get more aggressive just to prove that they're credible?
Right.
So I think it's a really dangerous, I think these two things together are extraordinarily dangerous for everybody.
We know that you follow the gold markets really closely, and you know we're Wall Street Silver, but your love is obviously gold. And are you surprised gold is not responding more favorably with this economic backdrop? You know, gold's still in the 1700 range with everything going on in the world.
No, I'm not surprised, because we're not talking about real gold. We're talking about spot gold contracts that are cheap and easy to manipulate. And since a rising gold price is an indication of a failing currency, no, I'm not surprised at all. Take advantage of it. Right.
Yeah,
and I do also love silver too.
Yes.
Oh, we know you do, but you know, you spend a lot more of your time talking about gold on your channel.
But that's only because of when they reset the currency.
Right.
And and additionally, it's easier to carry a lot of wealth in a small package.
No, I get it. I totally get it. One of the other things that I wanted to bring up is, you know, I know you've been watching the World Economic Forum really closely and everything that they keep announcing, and you know, as part of the Great Reset. And this one came up today. It's like they keep pushing these things. They want to start chipping our kids. Solid reasons to microchip our kids.
Right.
You know, my thought was that, you know, I made a little bit of a sarcastic comment. This is about social credit scores and tracking every transaction and movement we make. But, you know, what's your first thought when you keep seeing these types of suggested articles from the World Economic Forum?
Well, exactly what you're talking about. And I remember back when they started chipping dogs. You know, you know, you're laughing, but I'm dead serious about this. I said that is a precursor, because if you get people comfortable, well, think about it. If they can get people comfortable with chipping their dogs, their pet that they love, I mean, is it really a big, huge leap for some people? I would never do it. But then again, if it were my choice, I would never chip my dog either. But, you know, is there really a big leap from a pet that they love to a child that they love? Look, it's going to keep them safe. I mean, they'll come up with all of these reasons.
Oh, all their health information in case someone finds your kid or something. Yeah.
Oh, yeah.
Of course, just scan my kid, right?
Yeah, my kid, right. The kid gets lost. Oh, okay. Well, it's got a chip in it. Just scan the chip. They'll call you.
Scan the back of his neck, plug him into the matrix, and you know, and we'll find the parents, right? It's
yeah, but it really is about going into a full surveillance economy. You know, and we already have adults that have volunteered to get chipped, because it's so much easier to pass through a door when you just wave your hand than, my goodness, would you have to carry a card that would give you that same entry?
There's another one that I just saw yesterday. I'm going to share it sort of along those same lines. This guy, a Tesla, this Tesla owner, you know, the little key fob has the little chip inside of it. He had it inserted into his hand so that he can control his Tesla without needing his keys anymore. Just the RFID thing in his hand is implanted now. And my comment was, I guess selling your car is going to be painful or something, unless it can be reprogrammed while it's in your hand in some way. I don't know.
Oh my God. I mean, are people really that stupid?
Right.
People are doing this stuff, Lynette. People are doing it, and they're fine with it. And I'm not fine with it. I don't think I guess most silver and gold investors, I think they're sort of like me or us, I hope. I don't think a lot of my audience would do this, but
no,
there's a huge part of the population that they're totally cool with this, and it just boggles my mind.
Who needs privacy? You know, who needs autonomy? Who needs choices?
This is
People don't realize the cost of this kind of thing. They just don't realize the ultimate cost. But when you know that, I mean, actually, there's a huge test that's going on right now in China, right? They have more people that are rioting and protesting than I think they've had in a really, really long time. And I think that's a test of the full surveillance economy. It's super interesting to see what happens in China.
Yeah.
But it's insane. It really, it is just literally insane because you are giving up your life. Whether you realize it at this moment or you don't realize it yet, sooner or later you will. I mean, that's what physical gold and physical silver is all about too. It's about maintaining your choices because everything around you is about taking those choices away.
Back to gold and silver, you know, the key thing a lot of people are waiting for is sort of a Fed pivot. Like if the Fed were to pause in increasing rates, everyone thinks that's when everyone will start anticipating gold and silver will go up because the next move from the Fed's going to be down to stimulate the economy or get us out of the depression that's coming, right? Start printing again, easy money's back. And the Fed balance sheet, you know, the key thing here is like here's the long-term balance sheet. The Fed, you know, the Fed printing, you know, going through their process of with reserves of getting reserves into the system where the banks create the money, fund our deficits. So back in 2008, you know, back before they were doing this game, we were less than $1 trillion. This was a couple $100 billion back here, 2006 to 2008. We had the great financial crisis. We got up to 4 trillion. We had COVID in 2020, and we're now at 9 trillion. They're starting to do this QT thing where they're slowly reducing the balance sheet, and everyone's just waiting. All right, when's this going to break? And then we go back to easy money. Where is the danger here? Is this like this goes to 15 trillion, 20 trillion? What's the next stage of this game here?
You know, the real stage goes back to that confidence piece, because that's the only reason why this whole system is held together for this long anyway. And, you know, the Fed basically gave up that forward guidance. So did the ECB, so did the Bank of England. I mean, the big global central bankers, they are not doing forward guidance anymore. And since you're talking about 2008, that's when they came in. And it was basically the Fed said jump and the market said how high. And they were advertising what they were going to do and giving Wall Street enough time to get into position to take advantage of that. And then all of a sudden, they kept promising 50 basis points, 50 basis points, 50 basis points, and they came out with a 75 basis point move, which may not seem like that much, but that was different than what the Fed had been telling the markets. And so that really key, important level of confidence was destroyed. And bank to bank was destroyed through the interbank rate in 2008. Central bank to central bank was destroyed with the Swiss surprise in 2015. And now Wall Street and the central banks, and now the central banks are coming out and saying, well, we can't give you the forward guidance anymore. So Wall Street is now operating blind. And when you talk about the pivot, you know, how far down will they allow the real estate markets to go? Because now we are beginning to see price cuts. You know, we have a lot more inventory on the market, et cetera. So how far down will they allow that to go before it gets too painful? How far down will they allow the markets to go before it gets too painful? You know, and so they have that on one hand, and they have their credibility on the other hand. Because when you say, well, what is that number? I don't know that it's so much a specific number as it is public confidence, because that's the last thread that is holding this whole house of cards together. And they have to control the inflation because the rapidly rising inflation makes it obvious to the public. And they even admit it. They don't know. We don't know. We don't understand inflation like we thought we did. Well, you know, they created the system with inflation built into it so that they could rob you and you'd agree to it because it was slow enough. but now it's happening really quickly. So, you know, good that oil is pulled back and we see a little bit of relief at the gas pumps for the moment.
Right.
But I don't know that there's a number. They can't run off that balance sheet. You look at it again, they tried back in 2016. And then in 2018, things were falling apart. Everybody was trying to tighten and normalize so they would have some ramp room to lower interest rates to stimulate. They can't do it. It's done. It's done. I'm not saying they won't. I'm not saying they won't do. Oh, no battery. This is what's going to happen to them. Oh, there we go.
Oh, there we go.
There we go. I'm not
That's
saying
so
that
cool.
they're not going to do that. They're going to do that because that's all they have. But when they do that this next time, which, you know, who knows? You know, maybe next year. I don't think they'll do it this year, but who knows?
Yeah.
You know, that's it. It's the public confidence. And that's why, you know, gold and silver have to be suppressed because they don't want the public to own it. Because that truly is invisible. It's outside of the system and it has the broadest base of buyer. So it doesn't ever go to zero.
Very true. Very true. And I think a lot of people are sort of anticipating that as soon as unemployment starts ticking up, all these layoffs to different companies start showing up, as soon as we're officially in a recession where they can't even deny it anymore, unemployment's going higher. At that point, it's going to be incredibly difficult for the Fed to keep on the quantitative tightening. It'll be impossible to raise rates anymore. At some point this breaks and then all the political pressure shifts back to they've got to lower rates and goose the economy. I mean, they're not gonna, politicians, their number one priority is get reelected. So politicians are not going to keep letting the Fed do what they do. The Fed is not independent. If Nancy Pelosi's portfolio is going down, guess what? The Fed's going to go back to easy money. There's just no chance of.
Well, that's what makes it such a challenge, though, because when they do go back to easy money, you know, first of all, it'll be interesting to see, you know, they'll drop the rates back down to zero, maybe even sub-zero, maybe negative rates. But that's when you're going to see them 100% lose control of inflation.
Yeah.
Because they're going to be encouraging it, you know, just like this new act, it's encouraging the inflation because you're spending new money. It's not money that's already in the system.
Right.
It's already spent.
Yeah.
So this is critical. I mean, that's when we go into the real hyperinflation.
And that's when gold and hopefully silver, we're not rooting for all this to happen. We're sort of planning just because it seems like it's inevitable, but that's, I think, when gold and silver launch, when the confidence is gone and people are.
I think, Jim, that if you're counting on the Wall Street spot market to give you an accurate opinion of the true value of gold or silver, then you're going to be holding your breath because it's nothing to suppress it. So we'd have to look at the black market, will there be just like it does in other countries that are going into hyperinflation, and those governments maintain the rates and they maintain, the value of gold and silver, suppress it. And then, even as the black market is showing the true value. So maybe in this country, because we're so large, maybe that will show up in the premiums. I mean, it's already showing up in the premiums, isn't it?
Oh, yeah.
Okay.
Yeah.
So
$9 or $10 premiums for American Silver Eagles. It's crazy.
And yet, you're looking at silver on the spot market, you see? So those premiums are already telling you this is not a real market. You can't count on Wall Street.
Yeah, exactly.
And, I focus so much on gold because it's the primary currency metal. So when they reset the currency and they do those overnight revaluations, they do it against gold.
Yeah, that is true.
So, I just keep accumulating because
all you can do.
that's my wealth insurance.
That's all you can do right now.
Yeah. Am I going to go buy stocks? I don't
No.
think so. Am I
No,
gonna
that's
buy
not you.
cryptos? No. You know, am I gonna buy bonds?
There's no Lynette coin? There's no Lynette coin? Zang coin?
Had many offers. I said,
Yeah.
do you not watch my videos?
That's hilarious.
I know, I think it's hilarious too.
Lynette, thank you so much for joining us and giving us an update. We really appreciate it. And we're definitely going to have you back on in the next 3 or 4 months.
Absolutely. A lot of changes are happening and it's always fun.
Yeah.
So I look forward to it.